right now. The JSE looking set to rally and end off a week after the U.S. markets buoyed Asian markets. That's as the latest inflation data from the world's largest economy beat expectations and gave investors something to smile about. Matete Thalare is head of foreign exchange execution at Rand Merchant Bank, joining us now for a quick analysis of how the JSE is shaping up this Friday. Mr. Thalare, thank you very much for your time. Let's begin with the local index, which seems to be flourishing, with the Rand still below the 18 Rand mark. Talk us through what's driving the market moves there.
Good morning, Godi. I suppose it's a happy Friday if you're looking at the Rand. I mean, you know, yesterday morning we started the Rand at 1778, having largely traded sideways for the past couple of days. And I mean, initial resistance was around a 1765 level, which was the low for the past 2 days on Wednesday and Thursday. But, you know, as you said, US CPI figures were obviously the numbers that broke the camel's back. And obviously we've seen a massive rally, you know, taking the Rand to 1732 this morning already. I mean, if you think about 2 weeks ago, we were trading around close to the 1840 mark. So obviously that means a Rand lower, and I think that also feeds through into the year-to-date performance for the Rand, which is now negative 8.2%. Versus a few weeks ago where the Rand was down close to about 12%. And some of the risk drivers and obviously the things that fed through into the stronger Rand over the past 24 hours include the manufacturing data for September, which surprised to the upside, rising 2.9%. Versus the market prediction of 2.3% negative. So obviously that just shows you that manufacturing data, obviously despite the doom and gloom with regards to Eskom and also Transnet, that also has showed some positive numbers. But don't forget, I think the risks are still aplenty into the close of the year with the last 7 weeks. I mean, there's still issues with regards to Eskom, Transnet. There's still regards to the geopolitical tension out in Eastern Europe. You're still looking across the Atlantic with the US midterm elections, and also the central bank meetings that still need to happen from the Fed, the ECB, the BOE, and also the SARB before we close off the year. And obviously, as you mentioned earlier, everything over the next coming few weeks will be centered around the local politics with regards to the ANC's elective conference. So that's also going to be something that feeds through into the Rand market and obviously give us a bit of direction as we close off the year of 2022.
Let's talk about that US CPI, those numbers coming out yesterday, and the markets seem to like it. Talk to us about what the implications of this data is for the US Fed moving forward.
So look, I mean, the softer than expected October core CPI number, you know, yesterday, I mean, that offers the Fed a powerful justification to slow down the pace of the rate hikes that we've seen. You know, I mean, already we've seen them hiking by 75 basis points over the past few meetings. The baseline for them now going into the 14th of December, which is their next meeting, that is now expected for them to raise interest rates by at least 50 basis points. Now, what we're seeing is that disinflation is becoming more widespread in the goods sectors market in the US. I mean, this is suggesting that firms that might be offering discounts to obviously liquidate their excess inventory. I mean, when you think of things such as household furnishings, apparel, electronic items, that all saw a substantial drop in inflation. But I think what is going to be quite interesting on the 14th of December when Jerome Powell gives his speech, I think he is going to remind the markets that underlying inflation is still 3 times higher than the target. I mean, the US, you know, target is 2%. At this present moment, it is at 7.7%. But, you know, before those figures and obviously them giving us their statement and their speech on the 14th of December, there's still a lot of data points that we still need to go through, the likes of the jobs payroll, another set of CPI numbers. So it's going to be quite interesting to see how all these numbers factor into all of this, whether they're going to actually hike by 25 basis points, 50 basis points, or even 75 basis points. But that is obviously saying, you know, from yesterday's number, there's still a lot for us to consume before we get to the 14th of December for the last meeting of the year.
Let's focus on commodities, oil in particular. Prices steadying amid that milder U.S. inflation data, but the prices look set for a weekly fall. Help us make sense of those developments.
Sure, it's in a weekly fall, but I mean, if you think about it, it's actually in a mini rebound. I mean, prices have risen to about $95 a barrel, from about $85 a barrel in September. Now, the decision by OPEC Plus to cut the output was obviously responsible for roughly a third of the increase in the price, but also higher oil prices have created winners for countries such as Saudi Arabia, Russia, the likes of Nigeria. But, you know, as soon as we see these countries gaining, it's a zero-sum game. There has to be losers on the back of this. So countries such as Pakistan, Thailand, the Philippines, us here locally, we have obviously bear the brunt of these losses. But nonetheless, I mean, what you're also seeing is that obviously oil has also shed some of the earlier gains that it did have in the beginning of the year on the back of the Chinese COVID-0 policy that is going to weigh on the demand outlook. I mean, already there has been a back and forth with regards to the Chinese economy reopening, and obviously that is dwindling. You are seeing the leadership in China talking about their need to stick to the COVID-0 policy, which is obviously trying to fight the virus. But on the back of that, that is also weakening the outlook for the demand of oil. But obviously, you know, I think what we need to also remember is, you know, earlier this week, Brent was at $100 a barrel. So obviously these concerns around the demand outlook have obviously pushed the price lower, but there's still a lot of things for the oil market to consume. Also into the close of the year, there's another OPEC plus meeting that is going to happen in the next few weeks. And also at the beginning of December, there is going to be sanctions on Russian oil flows, which obviously is going to be interesting to see how the market digests that, combined with the Federal Reserve policy meeting in the middle of December.
Let's conclude with company news. Richmond announcing strong performance for the 6-month period, which ended on the 30th of September 2022. Talk us through their performance.
Look, so quite an interesting, record first half earnings for demand for Swiss watches and jewelry. Despite inflation and weakening consumer sentiment globally, they've really done well. They struck an upbeat tone despite the macro uncertainty that we're facing. And also what's quite interesting is that the second quarter sales recovered in Asia Pacific. And I mean, if you remember, Asia Pacific is Richmond's largest market. Now sales there recovered to a 6% increase in the second quarter despite the continued pandemic-related pressures. Obviously, as we spoke about earlier, the Chinese COVID-0 policy, that's also feeding through. But what you also need to remember is that Richmond is a luxury goods brand. They count jewelers such as the Cartier brand amongst its brands, and they've made a net profit just for the past 6 months of 2.1 billion euros.
Wow.
So I think if you think about it, the Swiss watch industry is obviously revving into a higher gear this year, especially with exports up 13% in the first 9 months of the year. And I think it is one of their best months ever in September. So it looks like, if anything, Zoli, I mean, you need to get yourself a watch so that these numbers continue growing.
I wish I were that rich, Mr. Thalare. Thank you very much for that markets update. Matete Thalare is the head of foreign exchange execution at Rand Merchant Bank.